Good morning, ladies and gentlemen. I'm Dan Ridsdale, Head of Technology at Edison. And our first stream is on disruptive technology, in particular, artificial intelligence. And it's obviously, we're quite short of time and it's a very large subject. We've got some fantastic speakers today and they're going to run through very many elements of artificial intelligence. Now, one of the questions we were asked when we were deciding the subjects for this event was, is artificial intelligence overhyped? And the answer is yes, it is overhyped, but it's also certainly the fastest and possibly the most significant structural growth trend that we've seen in our lifetimes. And very significant value is going to be created. Not everyone will succeed, but those who do will create enormous value for shareholders. The other point I wanted to make is that we're good at this. And Cyrus, our first presenter, is going to show us some slides that show us the UK is number 3 in terms of IP creation in artificial intelligence. This is an area we really are strong at. However, it's an interesting point that 2 of our initial presenters, Darktrace and Therapeutics, are leaving the market. And this is because they don't feel that the UK is providing the supportive market environment to nurture artificial intelligence, nurture their growth. And a market that is underweight structural growth will underperform in the long term. So we need to educate ourselves, we need to look at our ability to assess risk, and we need to support these companies in order to benefit from the huge value that these businesses are going to create down the track. So if there's one message I'd like everyone to take home from this event is embrace artificial intelligence, embrace structural growth technologies, bring yourself up to speed and think about ways in which we can provide the structures to both support and benefit from the growth of the companies who are operating in this field. So first up, we've got Cyrus. Cyrus is Head of Thematic Intelligence at Global Data. Global Data are a UK-listed market intelligence, market data business. And Cyrus has got some fantastic insights spanning the whole domain of artificial intelligence and artificial intelligence investing. Cyrus.
Thanks, Dan. So I'm Cyrus, as Dan said. I'm Head of Thematic Intelligence at Global Data. My background is, I first met Dan 20 years ago. We were both equity analysts at Nomura. So I've been a tech analyst for the last 20 years. And then after Nomura, I left. I set up my own investment research business where we created thematic scorecards to value technology companies. In 2018, I sold that business to Global Data, and then Global Data and I'm now head of thematic intelligence at Global Data, so we provide strategic advice to corporates and investment advice to asset managers in 20 sectors. A little bit about Global Data. So we're a British data analytics company. We're listed on the London Stock Exchange. Our market value today is £2 billion. We are using AI to transform the world of business intelligence. We have 5,000 corporate clients, about half of the S&P 500. We've got 3,000 employees, of which 2,000 are either analysts or researchers. We have 20 offices around the world. And at the bottom, these are the sectors we cover. So we provide market intelligence, so market shares, market forecasts, but also proprietary industry databases, things like drugs databases in pharma. And we provide strategic intelligence, which we call thematic intelligence. Now, these are some of the top investment themes that I would suggest you guys look at for 2024. We cover tech themes like AI, but also industry themes like fintech, health tech, energy transition, and of course macro themes, geopolitics, regulation, ESG. Today we're going to focus on AI, but at Global Data we look at all these themes across these 20 sectors. Now, this is how I see the future of AI. These are the 5 advanced AI capabilities, if you like. When I'm defining AI, these are the 5 categories of AI that I think of. The first is human-AI interaction. So that's things like Elon Musk's, brain-to-chip interface. The second is decision making. So Google Maps, they'll make a decision on how to get you from point A to point B, that type of AI. The third is creation or generative AI, and that's using large language models to create content or speech or songs or movies. The fourth is motion. So that's like the New York Fire Department sending in a robot instead of a fireman or firewoman into a burning building, and the robot assessing the situation. And the fifth in the middle is sentience. So that doesn't exist yet, but that's robots taking over the world. Yep. So that's the point we probably, I hope you don't invest in that bit. If you had £1 billion to invest in the AI value chain, where would you put your money? Now, my advice is to put it in column 4, which is advanced AI capabilities, which are those 5 things I just talked about. But of course, the AI value chain is very strong, and right now, everything from semis in hardware to data management, cloud services people in the second one, foundational AI technologies like machine learning or 3D modeling. These things I just talked about, which is the 5 key types of AI, and different companies develop these different types of AI, and of course, delivery. So where would you put that money? And my bet is you're going to make the most money in column 4. Now, the field is pretty crowded. We can't see any of these companies, but the point is there's a lot of companies you can invest in, and a big chunk of those are UK companies. Now, let's come to the UK. So in my team, in Global Data Thematic Intelligence, we have a thematic engine. And what that does is it looks at 7 alternative data sets. So things like patent trends, job trends, deal trends, FDI, foreign direct investment trends, and we tag them to companies and themes. And therefore, when we slice and dice it in this way, what we're showing you is when we look at countries and we look at the AI theme, is it me making a noise? I can take it out. Yep. So when we look at countries, then the UK ranks 3rd in AI after the US and China. Now, obviously, there's a big gap between the US and China in the UK, but based on the level of activity, the level of AI news, the volume of AI patents and the volume of AI deals, the UK is number 3. However, like I said, there's a big difference between the US, which is the top chart. So this is patent publications, and the top chart is AI patent publications for big tech, so the 7 big tech companies, and the bottom chart is patent publications for the whole of the UK. So there's a massive, massive gap, but nonetheless, we are 3rd. Other countries are even further behind. This chart shows active jobs in AI, so jobs which have AI within the job description. And from our database, you can see the black line is big tech. These are the AI jobs that big tech is hiring. And the blue line at the bottom is AI jobs in the UK. So again, we're behind, but we're number 3. And then, of course, these are companies you will undoubtedly recognize. Google's DeepMind, a British AI company bought by Google. Darktrace, a British cybersecurity company about to be bought by Thoma Bravo. Arm listed, announced results today, worth $120 billion, UK-based but listed in the US. And of course, GraphCore having a lot of trouble at the moment, operational troubles, but GraphCore is redesigning how we build AI hardware. And SoftBank is reported to be interested in acquiring it. So we have a lot of really high-value companies in the UK. This is my value chain again, and these are some of the UK companies that you can buy within those 5 elements of my AI value chain. And of course, Waze is another company, Wave, another company, a UK driverless car technology that you should all consider. Now, my conclusion really is that the UK's got great, is great for AI startups, but you need to change the way you value companies. You all know what's happening in the UK stock markets, but my recommendation is reassess how if you want to invest in growth, you've got to reassess how you value companies. Now, this is how we value companies in Global Data Thematic Intelligence. And this is our thematic scorecard. It's an old scorecard, and it's for the vehicle manufacturing sector. And I want to use it to illustrate how we value companies. So on the left, you've got the 28 top companies, car manufacturers, if you like. And this scorecard is 3 years old. You can tell that by Tesla's share price, which is 95 billion. Its market cap is 95 billion. And what the scorecard shows is, it's all about the future. So what are the themes that are going to impact the future of the car industry? You've got batteries, electric vehicles, IoT, autonomous vehicles, which is their version of AI. the impact of China, the impact of India, ESG, and things like that. And then we score every company on how well positioned they are for the next 5 years in each of these themes. Then we weight the themes, and then we have an overall ranking. So 3 years ago, we said Tesla was going to be the leader in the car marking industry. A lot of investors laughed at us because, of course, it didn't make many cars at that point. It was making 250,000 cars. It is now the undisputed leader. It's worth over 540 billion, which is much, much higher than the number 2. It still doesn't make anywhere near the number of cars Toyota and VW make. But the point is, reassess the way you value companies. And then finally, I'll just leave you with this note, which is, at Global Data, we're using AI to transform the world of business intelligence. This is a clip from our AI hub, and what it allows you to do, it allows you to look at 20,000 reports that we publish by 2,000 analysts every year, and all of our 350 proprietary databases, and ask a question like, what are the use cases for AI in the media sector? And this is the kind of answer you get, and then you can drill more. So I just wanted to introduce you to AI. Thanks, Dan, and over to the next speaker.
Some fascinating insights there. We've now got Ben Wilkinson, who is CFO of Molton Ventures. So Molton Ventures are one of Europe's largest technology-focused investors, fantastic span of investments and a significant presence in artificial intelligence and related domains. Thank you.
Good morning, everybody, and thank you, Dan, and also thank you to Cyrus for introducing the topic. I'll try and skip over any slides that overlap, but I'll talk you initially through Molton Ventures, what we do. So we were founded in 2006. We're an investor in technology, innovation, anything that's disruptive, that's born in Europe. So we're looking across the entire span of Europe for our investments. And we're investing at the early stage in those companies. And we've had over 150 deals. We source deals by going directly into businesses for the majority of what we invest in, but we're also able to be quite nimble by buying other portfolios when they're later in their life. And so the portfolio of 120 companies also includes the recent acquisition we did of Forward Partners, which some of you in the room may have been invested in. And that gives us access to additional businesses that we can bring into our stable. And we're 55 employees, so it's a very capital efficient model, as you would expect with an investment business. Just touching on some of the stages where we invest. At the seed stage, if you look at the chart on the right-hand side, that's the very earliest stage of investments into businesses and companies. There's a lot of IP being created, as Cyrus just touched on, but those companies obviously need capital. At the seed stage, we invest in seed funds, so we're an investor, an LP into those funds, and that gives us a very broad reach across Europe into companies that are coming through the pipeline. And so at the seed fund stage, we have 80 different seed funds all the way across Europe that we're getting quarterly data coming through on those companies that are within those funds, and that's about 2,000 companies. And then at Series A, we'll start to invest directly in those businesses when they've got commercial traction, and we can see that their use cases of their product and their go-to-market strategy are being driven and showing results. At Series B, that's where more capital goes to work, so it's more like 70% of our capital will go to that stage, and that's when you're really seeing expansion in those companies and their business models. So our current portfolio, we break that down over 4 very broad technology sectors: consumer, enterprise, hardware and deep tech, and digital health. But this is really all technologies. So within those broad themes, you've got sub-themes of fintech, and you've got themes of low Earth orbit satellites, you've got quantum computing, you'll have security, cyber security, but also security for blockchain applications. So a real range of businesses, but all of them innovative, all of them disruptive, and playing very much on the themes we're talking about today, how we assess technology themes and how we see those investment opportunities. So moving to how AI is within the Molton portfolio, we have the companies that we've highlighted in blue, which will be AI first, Graphical on the right-hand side, Cyrus has already touched on. This is technology coming out of Bristol, and we invested, one of the first investors, having backed the same founding team previously, but that was an investment we did in 2017. So it gives you a sense of the time horizons that you need to think about with new technology trends as well. And their chip was specifically designed for machine learning and AI, but within the data centers. And what's quite interesting when you look at AI themes that we've seen so far, a lot of the value in the infrastructure has been driven by the larger players, the US larger corporates that have big balance sheets and can invest in those stages. So it's quite important with technology themes to think around where will the value accrue and what's the timing of when you put your capital to work. And we'll see here that a lot of the AI powered, the ones in the red, and then the AI enhanced, the ones in the green, all of the companies are starting to adopt how they use the existing technologies even within their own products and models, and that's them increasing the speed of efficiency. For example, with developing, so 55% of time saved by developers using GitHub Copilot. This is where we're already starting to see innovation being accelerated by using and utilizing the technology that's available. Within our portfolio, I've just picked out a few of the names that are using this. So FinTech OS is developing using Gen AI tools and developing them on the back of its own data and its own products and services. Ravenpack similarly looking at training its own large language models, creating products for corporates, but using a lot of big data. And then in the health space, IESO is using that for mental health. So it's moving from cognitive behavioral therapy being delivered by a human with some AI assistance, flipping that around so that it actually starts with AI first. And they've just had a clinical trial showing that that's more efficacious than the human. And so you're already seeing some of the shifts in the models, and particularly with mental health, where most of that market of people who need the services aren't getting access to them. You can see that it can broaden out the base of what's going to be available. Skipping through, I think Cyrus has touched on some of this. There's a lot of capital being spent, but we're really at the start of that journey. The green bars are where you're seeing the capital being spent more on the infrastructure side, and then now from 19, 20, 21 onwards, a real ramp in the generative AI capabilities and the spend. And what that's driving is the consumer applications that we're now interacting with. So when ChatGPT was put out, we started to see that interaction and that change in how we are able to use the underlying technologies, and other engineers are able to experiment and develop apps on the back of that. Again, big market size growing, so how do we think about that as an investment theme? We'll look at the same layers that Cyrus has indicated there, the 4 layers being application layer, middle layer, foundational layers, and the infrastructure layers. At those infrastructure layers I've already touched on, that's really more about the large balance sheets and creating the underlying large language models and the power that goes into the compute. And as you come up to the application layer, that's where we're starting to see value accrete. So people will be spending their money on tools that are underpinned by the AI, and that's where we think that the value will come through, very similar to what Cyrus was just saying. And so how do we think about this in the future? We're already seeing that those commercial applications, which are replacing your phone, whether that's with glasses or whether it's with an AI pin, are driving consumer adoption and improving some of the services within our day-to-day lives. Other areas where you will see advancements are in the drug discovery space, using the underlying data sets that are available and improving that iterative aspects of ensuring that the drugs can be working and into those clinical trials. And then some of the developing tools like the software coding, that's already increasing some of the development that we've seen across the space and with the companies that we're investing in. And I think the overall theme that I'll leave you with here is technology is always very broad, it's always very innovative by its nature. We're disrupting existing markets, or it's disrupting or creating new markets, but the timing of the flow of capital and the timing of the value creation is very hard to establish. And so what we do with our model is we're placing bets at the early stage with small amounts of capital, seeing how themes evolve and develop. Our investment teams are then picking out the winners from those spaces and putting more capital behind those companies. And we then sit on the boards of those companies, help them through that growth and scaling journey, which for many of these businesses, even if it's AI first, will be very similar to a software business. Ultimately, you've got to look at your end users, be those enterprises or be those consumers, and look at what they need to get out of the technology. So with that, I think I will hand over.
Thank you, Ben. So a great way to get exposure to all of the IP and work that's going on throughout Europe at the earlier stage level in Molton Ventures. We're now going to move more towards using AI within a vertical application. We've got Ali Mortazavi, I've got my glasses on so I can't read them. Mortazavi, who is CEO of eTherapeutics. So eTherapeutics have developed an AI-supported platform to overcome fundamental obstacles in drug development. Were until recently or listed in the UK, but are now delisting.
Thank you.
Ali,
Thank you very much. Okay, so just a bit of background about myself and how we got here with eTherapeutics. I've been in the drug development game, in the RNA industry specifically, since 2012. In a company called Silence Therapeutics. As you know better than kind of most, biotech drug development is slow, risky, takes a long time. It's frustrating. It even has been frustrating for me. So 2020, I kind of started eTherapeutics, if you like, and took it over with really just a different slant on it. Is there a way to compute the future of medicine? Is there a way, is biotech really a data science problem? It's obviously a wet lab problem. And how can we put together a drug discovery, kind of stitch together an ecosystem where we can really use the power and speed of computation alongside, if you like, the wet labs and clinical trials to really try and do things differently? Okay, so this kind of drug discovery system that I want you to envisage, we've got two proprietary platforms called Galonic and HepNet, which I'm going to go through, and really they're going to be examples of how we use computation, and obviously even since 2020 really we've been using artificial intelligence, but recently there's been a real momentum behind that. How do we actually practically really use that on a day-to-day basis? What does it mean for us? Does it actually make a difference? Okay, so kind of any drug development company, a drug platform is this kind of starting point. The word platform, especially drug platforms in biotech, are, let's say, an abused term. Every single company seems to have a platform. For me, a drug platform really should have a couple of attributes which are just essential. It's got to be reproducible, modular. You've got to be able to do the same thing every time. If you have to do new things with a new project, that's not really a platform. And really, to my mind, this is a platform that I developed at Silence Therapeutics, brought to eTherapeutics. This is, in my opinion, the most powerful modular platform, drug platform that there is in the world. It's not a research platform, it's commercially validated. There are now 6 approved drugs using this particular platform. And basically, it does what it says on the tin. And to sort of mold that together with, let's say, computation and trying to sort of use computation, there are certain attributes that we can rely on, if you like, a priori before we do anything with our drug platform. So we know our drug delivery system always delivers our drug to one cell type, hepatocytes. For the purpose of this presentation, we always deliver our drug to the liver. So that's pretty good. It goes to one place, doesn't go to lots of other places. That means that, I think about hepatocyte cell types as a data structure in terms of computation. The next attribute is we can stop the function of any gene in hepatocytes, right? So that's kind of very useful. We know we can do that even before we talk about a gene or any disease, right? We also know that with a small subcutaneous injection, we can stop the function of any gene for almost always 3 months, maybe 6 months. So we have this very kind of friendly sort of patient regimen, but there's no daily pills, there's no repeat pills, one injection, 4 injections a year, 2 injections a year, very sort of patient friendly. And the kind of net conclusion of all this is the modularity and the speed of this platform. We can go from an idea, if you gave me a gene in the liver and a disease, and we said that's a good idea to go and prosecute, we can go from idea to proof of concept in 12 months, actually probably less than that. And I'll come to how that compares with some other timelines. So this is our kind of drug platform. Okay, so imagine you're in the liver. One of the kind of unique functions of the liver in physiology is that the liver is like the kind of, if you like, the CPU, the central organizer of so many biological processes. So what that means is, slightly counterintuitively, we're not a liver disease company, although we are interested in liver diseases as such. but our addressable market of opportunity is, let's say there are 25,000 genes in the liver, all of which we can basically stop the function of. We know we can do that. And then the disease areas that we can, if you like, affect, there are cardiovascular diseases, immunology, blood disorders. If you look on our website, maybe the most extreme example we've got is a program we're actively working on, which is stopping the function of a gene in the liver for one of the leading causes of blindness in the eye. So, geographically, the liver is very far away from the eye. You wouldn't have thought a gene in the liver could necessarily have such an impact. But that's kind of, maybe one of the really important attributes here, that, this kind of pool of genes, available genes to sort of reduce the stop the function of those genes, has such a wide systemic potential effect. So really that converges into the ultimate question for us. Which gene should we stop the function of to improve which disease? Okay, so to that end, getting to the sort of data side of the computation. So, because by virtue of our delivery system, we always go to the liver, we're interested in genes and livers, we've put together really, you can think about HepNet as the world's largest hepatocyte atlas, if you like. Every piece of data that you could ever imagine, whether it's scientific papers, whether it's omics data, whether it's patents, every single related data to that domain of liver genes, liver diseases, has been sort of collated, sitting there in the cloud. It's an ongoing project because there's new information coming out all the time. It's being updated. It really is a kind of an enormous data resource, which we basically that is the foundation of our AI, if you like, right? That we are trying to really intelligently mine that sort of data. And kind of ultimately, data on its own is lovely, but it's like no good. There's so much of it. It's just impossible for any enormous, large sort of humans to really sort of go into. Around 2022, so eTherapeutics is a kind of weird and wonderful biotech. We have, even in 2020, we have software engineers, AI programmers, we've got cloud engineers, people you wouldn't necessarily find at traditional biotech. So we really are a hybrid sort of half technology company, half biotechnology company, as well as our chemists, medics, and etc. So we've been really experimenting with large language models, natural language processing for quite a few years, but around, I would say, at about a year and a bit ago, just like everybody else, there was just such a profound improvement in performance with the new, for example, GPT-4 ChatGPTs that you can see, that really, for the first time, we could really, really intelligently try and use our data. So to that end, what we're developing is our own, if you like, language model. ChatGPT is an enormously broad language model. You can talk about tables, chairs, philosophy, anything you almost want to. But in the world of hepatocyte genes and diseases, not particularly useful. We're trying to train a model based on our data. In effect, if you like, it becomes an expert in the field of that question, which gene, which disease, kind of knows everything about that domain. So we're training that model to do that. And ultimately it goes to this convergence. It's like, look, we're looking for genes to basically stop the function of, to improve a disease. And our language model, you can think about it in some sense as trying to sort of gamify that process. I mean, gamify is not necessarily a phrase you would use with drug development and serious diseases. But ultimately, our question is, there are so many gene disease pairs. There are so many potential things we could do, but what are the best ones to do? Can our language model actually predict the probability of success before we do any experiments? What are the very best ones to do? What are the best patients to have in a clinical trial, so we can kind of assess all sorts of different markers, blood markers? What are the best models? We can design our drug. Even our language model is not just limited to language. We can actually, for our drug design, we use it. And ultimately, think about it as a sort of scoring system, which, if you can really rely on that scoring system, saying this gene in this disease, with all the kind of surrounding information and all the planning that it has to do, the probability of success is X. So in terms of kind of going back to the drug platform and how that mixes in with the AI, is ultimately all biotechs have to test their hypotheses. There will be a day, I don't know when that day will be, when maybe everything will be done computationally. Can we do a clinical trial computationally? Maybe, if you've got enough data on people, if you really believe in that data, that's possible. I'm talking many, many years out. For the moment, it's a hybrid approach: computation, data, artificial intelligence, and then try and validate that as quickly as possible in the kind of wet labs and clinical trials. So a couple of really important things is that we can go from idea, gene disease pair, we can make our drug in less than 6 months, which really is, to me, astonishing in the field of kind of drug development. Take a sort of a competitive drug modality like a small molecule. From an idea, it can take something in the region of 7 years just to make the drug, just to make the best possible drug. The amount of sculpting, iterating you have to do. We can go from, as soon as we know the gene, we can make the drug in less than 6 months. You know, we're sort of sometimes almost doing it at 4 months. So that already, it's not computation speed, but in the world of chemistry, it's very, very fast. And then we can basically take that drug and test it in a relevant animal disease model. So like I said earlier, we can have proof of concept from idea, 10 to 12 months, around less than $1 million, which again is quite an astonishing sort of turnaround. So we're not going at breakneck speed in the computer and suddenly it's like 7 years to do that. We're trying to do that in literally a matter of months. And then what that really means is that we can get to really the ultimate test species, which is humans, in record time, maybe faster, not maybe, the fastest possible time I've seen in the drug sort of development space. And this system, platforms, our set of platforms is producing kind of results. We have, you know, four, if you like, target indication pairs. We've developed proof of concept data for those. We have 2 which are in IND enabling studies, going to be in phase 1 trials within 18 to 24 months in humans. So again, these are not conceptual ideas. These ideas are being run. We've made drugs, they've been in the lab, they're going forward into toxicology studies, etc. And the system is evolving. It's not, you know, maybe like this particular language model is not something that will ever end. It's always going to be iterated. But we are discovering completely new genes correlated to diseases that you won't find in other people's platforms. We're seeing very strong biological activity. You know, my kind of takeaway point is we are using artificial intelligence not in that sort of slogan way. We are really active practitioners of it on a daily basis. Thank you for listening.
Thanks, Ali. We've now got a company who are using artificial intelligence to disrupt the marine intelligence market with a cloud-based AI-supported platform. We've got Ami Daniel from Windward AI, a company that's enjoying great momentum on the back of an innovative platform. Thanks, Ami.
Thank you. I'd like to start talking about the sun. Who enjoyed the sun in the last weekend? Can you please raise your hand? And the reason I'm talking about the sun is, did any one of you feel more optimistic, more energetic? Okay. Raise your hands. That's good. Let's start the morning on the right side. So to build technology and to build great businesses, you need to believe in something. I think it was Martin Luther King who said that belief is like walking up a stairway without seeing the next step. I was listening to your CEO saying about the UK markets, what do you do, what risk? And I think maybe I would start, and a great presentation by the way, great event. I would start by saying, I appreciate you need to be doubtful, but perhaps belief is the right thing. And perhaps doubtful belief or being critical about what do you believe in. So I've been asked to talk about generative AI and how we use it. So I prepared a presentation for you about that. So this is not the generic company presentation, which you can see online. Okay? Good. I'm just going to start by saying that I'm the world champion in failing. So if anybody needs any failure lessons, I'm free between noon and 1 p.m. today. And through a lot of failure, maybe I've also seen that a bit what succeeds. So we're a maritime AI company. I've been doing AI for the last 7, 8, 9 years. Okay, it's not really just a catchphrase. Bradford Cross from DCBC coined the term called vertical AI about 8 or 9 years ago. If you just Google Bradford Cross DCBC vertical AI, you'll see a great 45-minute presentation. Basically, it says there is horizontal AI, which means ChatGPT is a good example, AI that can do a lot of things. And in specific verticals, doesn't work. You need to wrap around it, you need to train it, you need training data, you need an understanding, you need to build it into the products. We're a vertical AI company that tries to accelerate world trade. We came to market a couple of years ago. My view this year is the tipping point. I'm the CEO, you can believe me, you cannot believe me, but I guess I'll just deliver the results and then you can judge by yourselves. We've had a great year last year. We serve more than 200 customers right now. It's about 60% of the oil that's being traded around the world goes through our platforms for due diligence. Exxon, BP, Shell, Glencore, and many others. A lot of the big mining companies, BHP, Billiton, Vale, they don't trade without going through our platform for due diligence. And more than 1 million containers, we help the customers predict their disruptions. We have a lot of public sector customers, I think 16 US agencies. So everything you see in the Red Sea, it's our customers doing that day in, day out. Which I think it's a great time to be in this business, because if you look at secular tailwinds, you're going to see that you have no choice but to move things in ships because it's the cheapest. That's just the reality. Even if you do nearshoring, it's still the cheapest. So it's not going to ever change because it's physics. But what is changing, I think, is what people can do with it and why are they doing it. And I think these are a few secular trends. One is geopolitics. Did anybody hear about the sanctions on Russia? Obviously, yes, right? So customers need help in navigating that because it's very complicated, changes all the time. Obviously, decarbonization, supply chain pressures. We were here in COVID. Who did not have toilet paper? And obviously AI, which we're talking about today. And this is our thesis. So I gotta say, this thesis evolved, and I'd like to walk you through it one by one because I think it's super important, okay? One is our curated data. AI without data is meaningless. Okay, it's just garbage in, garbage out. That's it. So I use the word curated data because we curate our data. That means we have algorithms, we have products, but we also have people. We have about 45 people curating the data and checking it. Let me give you an example. Between the point I started talking and now, the Russians have opened 3 to 5 new companies trading. That's hard to track automatically. People need to verify that. It's unbelievably fast. That's a good example. Containers moving around the world, they have a lot of problems. You just rely on algorithms. Sometimes a person can see that there's a problem. If you curate it at scale, very cheaply, it's very good. You get the best data in the world on shipping and trading, which I think we have. And then we couple it with our maritime AI, which we've been doing for a while. And I'll give you an example. Every time 2 ships meet in the middle of the ocean, they do this dance, like a tango dance. And we do this with 4 different AI models. It's TCN, neural networks, 98% accuracy. We classify where they're transferring. So the reasons customers choose us and pay double to quadruple, one of the reasons is that algorithm. Because we tell them, this oil comes from Russia, and you can trust that. Not this ship was next to that ship, and nobody knows what did that mean, and then you're losing money in the trade, and everybody hates your product. So we've been doing this for a while now. I think what's been new, I think, last 6 to 9 months for us, is these 2 concepts. Number one is Windward Agents. It's going to be in our product in the coming 30 days already. These agents are virtual subject matter experts, which means that our customers can interact with subject matter expertise, which we're the best in the world in our space, I believe, through the lens of our data. So they can ask the agent, what does this vessel mean? What does it do? How should I be thinking about it? Can you please help me generate an email to the ship owner asking them questions? The benefit here is productivity, nothing else. Just saving you time, okay? Which I think is very, very conservative. I like it. It's not net new value to the world, it's net new time for you. And I'm going to charge money for this. I don't build any tech and not charge money for it. So everybody can just, if somebody doesn't want to pay, I don't build a product. It's very simple. And I think the newest thing we've been doing, and I think it's on fire, and you'll hear about it in the next 9 months, I guess, is this bit. I think what LLMs allow us to do is to access customers' unstructured data, read contracts. I spoke to a customer trialing our products yesterday, and he told me, you know what, I think you got something here. I'm really sold on it. And I told him, what are you talking about? And he told me, quote unquote, that contract thing you're doing. That contract thing we're doing, to his words, the ability to combine their contracts, which they've never touched. You mentioned NLP, it sucks. NLP sucks, OCR sucks. Anybody who did OCR and NLP, know it sucks. It doesn't suck if you have a format. It sucks if you have 1,000 contracts in 1,000 different formats with no consistency, which is what logistics has. And I think if you combine that together, our curated data, physical movements, right? Atoms in the world, contracts, the bits, you combine atoms and bits with maritime and agents, I think in my world, that's a revolution. That's why I talked about optimism. What do you get from all this generative AI thing? I think if you create subject matter experts, you combine between Gen AI and vertical AI, I think it's called applied AI. And I think that's where a lot of the accrued value is. The problem is you really need to know your stuff. If you don't know your stuff, your customers will just shoot you down in a second, okay? So you can't bullshit your way into the customers. They make a lot of money. They know their stuff as well. So when you build it, you need to build it thoughtfully. Deloitte mentioned, and I liked it. This, by the way, I'm running a webinar tomorrow with AWS on generative AI and vertical AI. It's with their solution architect and their head of global supply chain. Check it on our website. You're welcome to join. It's for everybody. And these are the benefits of building this applied AI. So I said time, remember? Right? Quality. Actually, this is what I see with the contracting. Customers can just make more money and they're not aware of it. So we've been working across a lot of industries, blue chip solutions really. So I think, and you can see some of the names. I don't want to talk all about that. I just want to say numbers. The London market, I appreciate it's doubtful a bit, and that's okay. This is history. This is not the future. Okay, so historically, for the last 4 years, we've grown ACV, which is ARR, about 30%, and revenue about 25%. We'll try to do it again this year, no promises. But I think basically, if you have operating leverage, which means you have fixed cost and growing revenues, your margin goes up, you pump that money into technology, and because you're a brand, people pay you, and you have the best product, people pay you a premium. And I think that's the idea. It's a specialized market. Microsoft Copilot will never do this, ever, because it's too small for Microsoft. But it's big enough for us. I think that's the point. And we'll be growing with customers. What I also want to tell you is this, when I say operating margin. So we buy a lot of data, and you could see we made 7x on the money on the data we bought in 21. 22 was 10x, 14x in 23. Maybe this year will be more. And I think for people who say, oh, you know, these guys, they don't do AI, just buy data and tell it to others. If we just buy data and give it to others, nobody would pay us 14x. Okay, customers are not stupid, they're pretty smart, I think. So why invest? First of all, the sun. Investing and building a company is hard. Building technology is hard. I work very hard. I fail 3 times a day. But we believe in what we do. I think a gentleman asked me today, he said, hello, who are you? And I said, I'm Mommy. He said, who do you work for? And I said, I work for nobody. I work for what I believe in. That's my drive. I think we're working because we think this makes an impact in the world. I think hopefully make an impact for public security, hopefully make an impact for decarbonization, hopefully make an impact for better supply chains, and all this Russia thing that you might or not have heard of. We're founder-led. What do you feel? Do you feel the intensity when I speak? That's what my people feel as well. And I don't believe that you can build a very big company in a very complicated space easily. It's very hard to put your money where your mouth is and learn every day. I'm going to finish by saying a good thing about the London market, God forbid. Oh my God, it's a good thing. I'm going to give you guys a compliment. You scrutinize us to death. And I think it's very good, because I think I've learned to be more disciplined by the scrutiny in terms of expenses. I think we were not disciplined enough when we came to market. We are now, I think. I think you can always make more with your money. You can get rid of who's not performing. That's part of life. I think you can always find better ways to reduce your costs and increase your revenue, and you can push. And some of that CEO pushing is also because I know that in July, I publish my 6 months report. So my people have a counter on their Salesforce, and they know how much time they have on the end of the quarter. I appreciate there's a pressure and people want to go out of the market. I actually believe in the market. I think if you don't need to raise cash, which we don't, and you generate cash, which we will, then you can actually leverage that platform, a public company like Global Data have done, and I think they're the shining light in the example, so well done for that, to build a very big company. You just need to remember the sun. Thank you very much.
Thank you very much, and hopefully we are all feeling more sunny as a result of the presentation. I think we've got very little time left for Q&A. Maybe we'll just ask one generic one. We've heard a lot of a lot of things about the need to believe, the need to be more positive, but equally this is a space that's moving tremendously fast and is quite involved. And for a generalist audience, I'd just like to ask the question: where should people start? When you're looking at investing and growing from the generating value from the artificial intelligence opportunity, it's such an easy trade to put your money into NVIDIA or to one of the large hyperscalers. Is anyone prepared to start with that question? Yeah.
So can I follow on Anil's theme of geopolitics? So geopolitics is difficult to invest in, but if you look at the impact of geopolitics on tech or AI, let's just assume you have two technology zones, China and the US. And you've got the UK and companies like that in the middle. Not every company or country is going to align themselves with the US tech zone or the China tech zone. A lot of companies like the UAE, for example, they want to go it alone. Saudi wants to get into tech. And the UK is really well positioned to have, in the UK we develop companies and foreigners take them over. But as investors, that's good for you. So think of the UK and the wider geopolitical context. And remember, when you're investing in US tech, it's expensive. When you're investing in China tech, I would say China tech is uninvestable because government policy there. When you're investing in UK tech, it's cheap. So if you can afford to take a 2 to 5 year view, I think the UK tech is very, very investable right now, especially in AI.
Thank you. Ben?
Well, I think that's absolutely the case. And when I spend time over in the US on investor roadshows, it's a notable difference. Obviously, what the depth of their market. But what is interesting is that it is the value accreting to those top names. And even in the US, they're looking at the dearth of the sort of middle layer of companies and value that they can get. And I think for active fund managers or for retail investors that are sophisticated and want to choose stocks, the UK market is clearly very cheap right now. And there's a lot of stocks out there, but as with all technology investing, as I mentioned in my presentation, timing and having that breadth of understanding of different themes and where the value accrues. I think one thing that I won't just talk my own book, but for the whole of the UK market is very good at, there are a lot of investment trust type structures that you give the capital to the managers that know their space the best. And in our case, we're investing in private companies. We have an information arbitrage in those markets, and we're in that ecosystem across different technology themes. So we believe that we are best placed to put that capital to work. And I think that is a structure of the UK market which is quite distinct. You don't see that necessarily in other markets.
Thank you. I think that point about looking the next level down is pertinent wherever you are. We recently had Polar Capital, the large cap technology trust in, and they've completely refocused their portfolio to look at artificial intelligence, but they have to be underweight NVIDIA, Microsoft, and these large players because they're just so big and their concentration would be so high. So an AI fund needs to be underweight the most significant AI players because those guys are so big now, which is happening across the board.
Can I jump in with a quick addition? Number one, it's very simple. It's cheap. Sorry to say this. If our company was private, we would never get a 2.5 to 3x revenue. Period. Full stop. Okay. So I think that's number one. Number two is, I think thematically, if you want to invest in AI companies, just ask who's the AI leadership you believe in. Because as public investors, I don't think you have the tools to really assess what's going in the company. That's my humble opinion. Because it's just not that market unless you come over and spend more time with the company, not just read, which we have seen people do. I think the third thing I would say is, I think the question is, what's your return profile? Okay, if you want to make 6% a year, my friends, do what I did and put your money a bit in US bonds. It's going to work, I promise. Okay, 5% a year. Trust me, I checked it. But if you want to do something else, then it's something else. It's all a matter of balance. I'm not saying go put all your money in micro and mid cap. That's probably not smart. But as you build your portfolio, if you have an advantage, which is access to events like this, and you can spend time with management, assess your own things, and spend the time and use your competitive advantage because your US counterpart from Milwaukee will not fly into the Edison conference, in London to spend time with us. Is anybody from Milwaukee here?
Thank you. Ali, anything you'd like to add to that?
I mean, it's a very big subject, but you know what I'm seeing. The reason we delisted from the UK markets was there's a real capital problem here. I mean, you know, companies are kind of symbiotically linked with money. There's a lot of good ideas around, but without the money, without a good company, you know, it's a two-way street. And just the sheer quantum of capital in the US, it's just they enable so many things. I mean, actually, my view is, especially in biotech, they waste a lot of money. So a company will raise $400 million in the US, and maybe you'll get, I don't know, $100 million of value out of it, and they waste the other 300. But still, you know, the other 100, it's in the biotech space, can really have profound returns. But here, you've got this very bad negative feedback loop, where the capital is shrinking, but companies can't exist almost. So I don't know how to break that deadlock. But it's not easy.
I just touch on that theme. There's a lot of work going on in the private markets, linking pension capital into private markets. I think everyone's aware of Mansion House Compact and such like, but obviously that's also occurring at the public market level, looking at the pension funds and trying to change the incentives and change the regulations around what ultimately drives them just to invest in government bonds, and trying to get more capital back into the UK markets. And that may take time, but that will be a wave of capital, hopefully, that will transform some of these problems that we've clearly got ourselves into. But it's the macro factors, and Ali's right, liquidity drives everything ultimately, and it drives the ability to realise the opportunities that we're creating, and we need more capital.
Yeah, and we are seeing signs that US capital is starting to be deployed into the UK as well. So hopefully that's an encouraging sign. How are we doing for time? I'm afraid we are out of time. So that was your session. But thank you very much for attending. Thank you very much to our panelists. It was a fascinating discussion, a little bit compressed, but I think we hopefully covered the key themes, and everyone is around for networking and possibly meetings as well. Thank you very much.